Global financial markets remained on edge on March 17, 2026 as investors closely monitored developments in the Middle East conflict, which continues to disrupt energy supplies and push oil prices higher. Energy markets remain the central focus for traders worldwide. Oil prices stayed above the $100 per barrel mark, with Brent crude hovering over around $102 to $105 a barrel after weeks of sharp gains triggered by the war involving Iran, Israel, and the United States. Prices have surged more than 40% this month, reaching their highest levels since 2022 as attacks on energy infrastructure and disruptions to shipping through the Strait of Hormuz threaten global supply. The Strait of Hormuz normally carries roughly one-fifth of the world's oil supply, making it one of the most critical choke points in global energy trade. Any disruption to shipping through the route can immediately impact fuel prices and global markets. Governments are now attempting to stabilize the energy market. The International Energy Agency is considering additional releases from emergency oil reserves after already initiating what officials describe as the largest emergency crude release in history, with around 100 million barrels released so far as part of a 400 million barrel plan aimed at offsetting supply disruptions from the Gulf. Despite these efforts, analysts warned that energy prices could remain volatile if the conflict continues to threaten production facilities and shipping routes across the Gulf. Financial markets have also been reacting to the spike in energy cost. Higher oil prices raise concerns about inflation globally, potentially complicating central banks' plans to cut interest in rates later this year. Economists warn that rising energy costs could push consumer prices higher and slow economic growth if the conflict drags on. Meanwhile, gold, traditionally considered a safe haven asset during geopolitical crises, have shown mixed movement. Spot gold prices slipped slightly to around $5,000 per ounce as a stronger US dollar and concerns about persistent inflation weighed on the metal despite ongoing geopolitical uncertainty. Investors have also been shifting money away from equities amid rising geopolitical risk. Global equity funds recently saw their largest weekly outflows since December as investors move funds into cash and safer assets while markets try to assess the long-term economic impact of the conflict. Stock markets across major financial centers have remained volatile. Wall Street and European markets have experienced swings in recent sessions as traders react to both geopolitical developments and economic data. Technology stocks have faced pressure in particular, while energy companies have benefited from higher oil prices. Currencies have also been affected. The US dollar has strengthened as a safe haven asset, benefiting from investor demand during periods of geopolitical uncertainty. Analysts note that the United States' position as a net energy exporter gives it an advantage compared to major oil importing economies in Europe and Asia. Looking ahead, investors are closely watching several economic indicators scheduled for release this week. Data on US housing activity and crude oil inventories are expected to provide fresh signals about the strength of the global economy and energy demand, which could influence market sentiment in the coming days. Overall, global markets remain highly sensitive to developments in the Middle East conflict, with energy infrastructure under threat and oil prices already surging. Traders and policymakers are preparing for continued volatility in commodities, currencies, and stock markets in the weeks ahead.